Happy Wednesday to you. I'm Julie Tam, managing broker at Lynn Realty, a brokerage serving clients in the greater Houston area and from around the world since 1981. Look for me on har.com as Yao Tam. Thanks so much for joining me this week for another installment of my weekly Wednesday video series, Smarter Real Estate, where I offer practical strategies to make you a smarter buyer, seller, or landlord, and also take you along on some of my real estate adventures. These videos are shot in one take and are not edited. Today, I'm going to talk about a topic that I promised to talk about in one of my previous videos about the home buying process, and that's about how do you pay for the home and also prove that you can pay for the home as a buyer. And from the seller's side, how do you judge whether the buyer is able to afford to pay for your home before you accept their offer and take time with them to go under contract? All right, so I'm gonna use a couple of props from the game of life to illustrate what I'm talking about. There are essentially two general ways to pay for a home, whether you want to live in the home or buy it as an investment property. And that is either with cash or getting a loan or a bank note or a mortgage. Those are all synonyms for that. Okay. So first, about cash, that is going to be the more easy and straightforward way to pay for the home because you don't really have anybody that you're beholden to or to deal with a lender. It's just you yourself, and as long as you have the money in the bank and ready to go, you're good to go. So how do you as a buyer show the seller that you have the cash needed to pay for the home? Well, that's called proof of funds. So when you as a buyer are making an offer to buy a home, you need to show generally bank statements as far as how much money you have in order to not only pay for the home itself, but also to cover all the closing costs that you'll need to pay. With cash, there's less closing costs because you're not paying any fees to a lender. It's just yourself. And there's also less requirements in terms of, you can choose whether you want to get an appraisal or want to get a survey. You're not required to by a lender. And let me go ahead and give you some advice about the proof of funds. So if you're trying to buy a home, for example, that costs $200,000 and you have two bank accounts, one has $250,000 in it, the other one has $1 million in it, which bank account do you think that you should issue a statement from to show the seller? Well, I would advise showing the $250,000 bank account, because you don't necessarily need to show the seller you have so much money. That's private information. You don't know who the seller is. The other thing is that you also don't want to put yourself in a weaker negotiating position. Showing the seller that you have so much money means the seller might say, well, I'm not going to bring the price down so much because you have the money to pay for this home at the price that I want. Now, of course, you can say, no, I'm only willing to go up to a certain price, but still I feel like your negotiating position is weaker in that sense. So the other thing you want to do is to go ahead and redact or black out account numbers on the bank statements, just for your own privacy and protection. But of course, you want to leave your name on there to prove that that is in fact your bank statement and not someone else's that you're showing proof of. All right, now let's talk about the loan. So if you're going to get a mortgage, there are a number of options in terms of types of lenders that you can use. The most obvious one is your traditional big bank. And another one that may be obvious is a credit union or a mortgage broker that can shop around for different lenders. Those lenders may be more obscure, or they could be major lenders, but they could be ones you've never heard of, like smaller lenders. There is also such a thing as a lender issuing you a loan, so a mortgage banker issuing you a loan, but then selling off that loan after closing or even before closing to another lender. So you could have a different servicer for that loan, but you're still going to have all the same terms for your loan. Okay, one important thing to note before I go any further is that mortgage fraud is a federal crime. So you don't want to commit that. You don't want to ever lie or provide false information or incomplete information when you're being asked, or give any misleading information to a lender, because it can land you in hot water. You can be fined severely and also put in prison. We don't want that. You want to just buy a home and enjoy and live in that home, not behind bars. Okay, all right, so when you're going to seek out a lender, you obviously want to shop around a little bit. You don't want to let too many lenders run your credit because that can bring down your score. And if you're going to shop around and have a few lenders run your credit and give you, a pre-approval letter and a sense of maybe what your interest rate would be and how much you need to put down, then you want to do that within a short period of time, because that will, be less likely to affect your credit score as negatively. All right, and also you want to compare apples to apples. So there's such a thing as interest rate and also APR, and people get those things confused. Interest rate is just your basic percentage of what your interest rate is going to be. APR actually tells you the cost of the loan. So not only your interest rate, but it also factors in lenders' fees. So that way you're really comparing properly, because one lender may offer you a lower interest rate, but then charge you higher fees. All right, so once you figure that out and you decide what lender you want to go with, then you need to go ahead and get that letter from the lender. Now, let me tell you about two types of letters, and people get these confused all the time. They'll use the terms interchangeably, but they're not the same. One is the pre-qualification letter, and the other is the pre-approval letter. The pre-qualification letter is weaker than the pre-approval letter. I don't want to see a pre-qualification letter if I'm a seller or if I'm the seller's agent, okay? I want to see a pre-approval letter, and here's why. The pre-qualification or pre-qual or conditional qualification letter, that is merely the buyer telling the lender verbally or even in an email or a text about their qualifications. There's no proof behind it. The pre-approval letter generally means, unless there's an unscrupulous lender out there, but it should mean that the lender has actually run the credit report of the buyer and also seen documented proof of their income and assets. That makes it much stronger. The other thing that I personally do as a real estate broker is when I receive a pre-approval letter from a buyer, I call that lender and I talk to them personally, because I want to get a better sense of how well qualified this buyer really is. Because there's nuances, for example, if the buyer is kind of a little bit on shaky ground, but the lender feels like they can still issue the pre-approval letter, or versus a buyer who is very well qualified, has a lot of assets, very high income, excellent credit, and just, seems like a slam dunk to that lender for loan approval. That's going to make me feel much more confident in advising my seller that this is a pretty valid pre-approval letter and maybe you should work with this offer, okay? And that's the other thing too. If the buyer is coming along and doesn't even have proof that they can afford the home, there's really no reason to negotiate, because you don't even know if they can afford the home. You want to make sure they can afford the home first, whether it's with cash or a loan, and then we can negotiate the terms from there. Okay, so when you're going under contract as a buyer, you may want a financing contingency if you don't have enough cash to pay for the home should your loan approval fall through. And that financing contingency is usually going to give you a certain number of days in order to get buyer loan approval. That's not counting the appraisal or any final conditions that have to be met. That's just the lender approving you as a buyer and saying that we can issue you the loan. All right, and if you don't meet that deadline, you need to go ahead and send a written notice to the seller or the listing agent for the seller saying that you can't get the loan and you need to back out of the contract before that deadline. If you go past that deadline, then you're on the hook, and that really is bad. And then if you back out, you won't get your earnest money back, which is typically about 1% of the home price, and that you would have paid at the outset when you went under contract. Now, even though you can get your earnest money back if the contract is written in that way, you will still likely lose some money after being under contract and trying to go through the loan approval process and not getting your loan approved. And some of the forms of money that you could lose possibly are the option fee. So at the beginning of the contract, usually buyers will want an option period of on average about 7 to 10 days in the Houston area. And that gives the buyer time to get inspections done and to back out for any reason whatsoever. They don't even have to give a reason, and they can back out. They'll lose that option fee, but then they'll get their earnest money back. And I'm just talking about generic, most contracts, how they're written, okay? This is not a blanket statement about all contracts in real estate. There's no such thing. There's a lot of variety out there, but this is your most common type of contract. The buyer, of course, would have paid for an inspection if they had one done, so that's money they can't get back. They also may have paid certain lenders' fees, like doing the credit check. Maybe the lender's gone ahead and gotten an appraisal done. Really, you probably want to wait until you get your own loan approved before going to the appraisal phase and the survey phase, so that you're not wasting money unnecessarily if you don't get approved for this particular property. But if those are fees that you've already paid and you can't get back, then that's unfortunately a loss for you as a buyer. Okay, so the good thing is, though, that if your loan is approved, then you can proceed to closing. But here's the deal. So just because your loan is approved does not mean that it's smooth sailing all the way to closing. Anything can happen, and I have seen all sorts of things happen, unfortunately. So let me back up one step before I get to this point. All right, so your lender, first of all, is going to ask you for tons of paperwork. If you have a very straightforward situation, like you are an employee of a company that pays you a fixed either salary or hourly wage, and you don't really own other assets, you just have some money in the bank, perhaps a 401k, that's very little documentation you have to provide. But when your financial situation is more complex and involved, where you own, for example, maybe multiple investment properties, all sorts of different investment and brokerage accounts, maybe you have equity ownership in companies, wow, that's a whole lot more paperwork you're going to have to show the lender because you have carrying costs for some of those things. The lender is going to want to make sure you have enough money to carry those properties, for example. If they're vacant, if you have rental properties, you're gonna have to be able to pay the mortgage, insurance, taxes, HOA, etc. So you're gonna have to provide a lot more documentation, and it can literally be dozens and dozens of pages. So it can be a small nightmare. So you wanna make sure you stay on top of it so you don't cause any delays in the loan approval. So once the lender requests that stuff, send it as quickly as possible. And then also you want to make sure you keep your financial standing through closing. So don't go gamble away your money. Don't go making big purchases that affect you. If you're trying to get a loan, you don't want to do anything that's going to negatively affect your credit score. So don't go opening new credit cards or buying expensive things like expensive jewelry, a car, boat, or RV, or another house. And you don't want to try to apply for another loan in the process during that, okay, because everything can get affected by that. Also, please don't go quit your job. Try not to get fired. I was in a situation where I was representing the seller and the buyer of the home quit her job just a few days before closing. You know, lenders will actually call your employer in many cases, even up till the day of closing, to make sure you still have that job that's paying you the income. So don't quit. It's not to say that you should go ahead and quit the job after you close on the home thinking, I'm good, I got the loan, I can quit my job. Because you still want to be able to afford to pay your mortgage and not get foreclosed on. Okay, so once we get to closing and everything's good, you're going to be signing a lot more paperwork if you're getting a loan because a lender is going to have a stack of paperwork about that thick for you, whereas if you're paying cash, your size may be only about that thick. So there is a difference, and so it's going to take longer at closing if you are getting a loan. Now, that is a lot of information and it's pretty complicated and there's actually a lot more to it than that, but that's about the extent I can cover in this video. So if you have any questions, you can feel free to ask me. Now, one caveat is I am not a lender, so it's best to go seek out a lender to ask them. But if you want to just ask some general questions that I have basic knowledge of, you can reach out to me by commenting or sending me a message. If you're watching on YouTube, please subscribe to the channel and hope you'll like my video. And on Facebook, please like my page and the video as well. I hope to see you next week for another installment of my weekly Wednesday video series, Smarter Real Estate. And until then, thank you so much for watching and I hope you have a great week.